Hi friends, your Rosario from Simply Options. This week we have an exciting update. An update which is going to be a big savior in the tax compliance. Yes, it's an update which is recently issued by ICAI, a guidance note on how to calculate futures and options turnover in a revised method. This is what we are going to see in today's topic. The fun fact is, it has been issued by ICAI, but it became viral when Nitin Kamath shared it in his Twitter handle. Alright, without any further ado, let us get into today's topic. Let's go on. Yeah. Firstly, let us understand the need for turnover calculation and its relevance with the tax audit compliance. Alright. So, as per section 44 AB of Income Tax Act, any business, if you are conducting business, if the business turnover crosses 1 crore, then you are an eligible assessee for complying tax audit. But however, there is an exemption in that clause. If you are conducting a business wherein in the gross receipts not more than 5% is in cash format and condition, and in the gross payments not more than 5% is in the cash format, meaning 95% or above which are in digital receipts and digital payment format, then this 1 crore limit stands revised as 10 crores. I repeat, it is 10 crores, not 5 crores.
Now that we clearly understand what is the need for turnover calculation and its relevance for tax audit applicability, let us now get into how this turnover is being calculated for F&O business. For someone who's new to F&O business, he will ask Rosario, what Rosario? Turnover is a layman's calculation. Whatever sales figure you just sum it up, that is going to be my turnover. The answer is no. The turnover for futures and option business is slightly different from a normal business. Earlier we had a guidance note as per which the turnover was calculated. We have done an exhaustive video on that, but now that is being revised. For sake of clear understanding, let us revisit the old method with example, and also I'll tell you what changes has been done in the current phase and how we have to calculate the turnover as per the new method. All these three things we'll do it logically in a logical sequence. First one, what are the conditions for calculating the turnover as per the old method? There are only two things. Okay, first bulletin point, you sum all your favorable, unfavorable differences, that is positive and negative, profit and loss, all those things, you make it as absolute terms and then you add it up. That is turnover calculation, point number one. Point number two, all your sold value of premium of options, you just add it up. These two are the bulletin points to calculate the turnover. Let us see with an example. One with an option buyer perspective and two with an option seller perspective. Two things we'll see. Yes, so in this table, the first two transactions in the option buyer perspective, the second two transactions in the option seller perspective. I as an option buyer, I have bought a put. Where I have bought a put, I have bought it in 17,500 strike price on one expiry. For 100 rupees, I have bought this. And that expiry, the market has gone up. It has ended at 17,600. So this has become out of the money. So ideally, this will go to zero. So literally, whatever you bought at 100 rupees, you are literally selling it that at 0 rupees. Since it has gone to zero, you are literally selling it at worthless. So this is the transaction number one which has happened. Now, as per our rules, what it is, we have made a loss of 100, but we have to take the absolute term. So this 100 rupees loss has gone to the turnover. Plus what? Sold value premium. For how much you have sold for zero. You are adding that zero also here. So that's why the turnover is 100 rupees in transaction number one. In transaction number two, next week also you are doing the same thing. You are buying the 17,500 put weekly options for 100 rupees. As per your wish and prayers, the market crashes down to 17,000. Now the same option which you have bought for 100 rupees, you are eligible to sell it for 500 rupees. So what it is now, the profit you have made on this is 400. Now as per our calculation, it is simple. So absolute value of profits 400 rupees is gone there. Plus what happens now? This 500, you have sold this option for 500 rupees. This 500 also you have to add it in this 400. Now the turnover is 400 plus 500 totally 900 rupees is the turnover. This is as per the old method from an option buyer perspective. Same transaction, let us put it vice versa for an option seller's perspective. In option seller perspective, the transaction number 3, you would have gained 100 rupees since it has gone to out of the money. You have gained 100 rupees. So, one favorable value, absolute value you are adding to the turnover. Plus, for how much you have sold that option, you have sold it for 100 rupees and you have bought it back to 0. That's immaterial. You have sold it for 100. So, this 100 plus 100, the turnover is 200 in transaction number 3. Transaction number 4, same, unfortunately, whatever you have sold for 100 rupees, you have to buy back at 500 rupees. You have made a loss of 400 bucks. So 400 absolute value, it is going at 400 plus sold value of premium. For how much you have sold this option? For 100 rupees you have sold. 400 plus 100, 500 is the turnover. So this is how in the old method it has been calculated. In short summary, you are, whether it is profit or loss, you are taking in absolute terms, you are putting in the turnover column, plus all sold value of premium you are also adding. That is determining your options turnover calculation. This is as per the old method. Now, they have done one important revision. Before going to what revision they have made, exact wordings, we will see the transaction number 3. You will clearly understand why there is a pressing need for change. In transaction number 3, as a put option seller, for how much you have sold that option? You have sold that option for 100 rupees. It has gone to out of the money. So, which means you are buying back at 0. So, what is the profit you have made? You have made a profit of 100 bucks, which is gone to turnover. That is fair enough. Then, methodologically, as per the bulletin point, you have to add the sold value of premium. So, you are adding 100 plus 100, 200 rupees you are adding. And you are saying the turnover is 200. In the entire transaction, you have just sold for 100, it has gone to 0. Where is the question of 200 rupees turnover? So this is an illogical method of calculation. Just monotonously, since some guidance note is saying that you, for a transaction where you have just shared with one person 100 rupees, he bought that option for 100, you sold for 100, your total turnover should be only 100. If you are adding the profits plus 100 again the sale value, it is becoming duplicate. This duplication is what has been revised in the revised guidance note. I'll tell you what the revised, now let us go to the phrase in what the revised guidance note says. Same conditions, you have to add favorable, unfavorable distance. You have to add the sold value of premium. All that is taken. There is just one additional wording they said. However, you need to add sold value of premium. However, if on this calculation of favorable difference, if the sold value of premium is already factored, you need not add it additionally for the turnover, which makes logical sense. This 100 rupees minus 0 is your turnover, 100 is fine. You should not add, since it has been the part of this turnover already, you should not add again this 100 rupees. That will not happen in the unfavorable differences. Say for example, in the next example, transaction number 4, you have made a loss of 400, alright. Plus sold value of premium is 100. So totally how much you are arriving? You are arriving 500, which is nothing but the bought option value. So your turnover is not exceeding the total transaction value. The total transaction value is 500. That's what you are saying, it is turnover also. So in very nutshell, in the new method, you have to bifurcate your P&L into 2 portions. Total favorable, all profits you put it one side. All losses you put it one side. On all profit instances, you just need to add only the absolute value of profits. You should not add the sold value of premium again. I repeat, you should not add the sold value of premium again. But for all the loss-making instances, you should take the absolute value of loss-making instances plus you should add the sold value of premium, which is nothing but the bought value. 400 rupees loss plus 100 rupees sold value of premium will give you the 500 rupees bought value. Literally, for all loss-making instances as per the new method, you have to take the premium of bought value, which is nothing but sold value plus loss. This is as per the new method. So you can clearly, for someone who is listening this to the first time, it will take some beating to get in. So I would suggest you just go back 30 seconds, you revisit these 4 examples again and again, then it will make absolute sense. This is the important update. I thought it is going to clarify with so many traders because I interacted with so many traders in the past 2 weeks. Everyone was having some ambiguity around this corner. So I thought this is going to help the fraternity. We have made this video with the fullest immunity. I generally don't say like, comment, share all those things, but I would request all of you to share this video to as many as traders who are involved in futures and options. This is definitely going to be a crucial one, particularly in this tax audit season. We are almost like very much close to the tax audit season. So this slight change in the turnover calculation will make many of the associates not to fall in the tax audit orbit. So thereby the compliance is very minimal. If because of the turnover calculation, all of them were above 10 crores. See, even in this example, old method is saying 1,700 rupees, new method is 1,100. So almost 40% the turnover has come down. So if your turnover calculation is coming drastically 40%, 50%, you will not be under tax audit orbit. So you will save a lot of complaints. So I will request all of you to share this with many people, which is going to help the fraternity. Thank you. I will connect with you in yet another video very quickly. Cheers. Goodbye.